Hello everyone, I just want to make a really quick video today because I'm so excited about Metaplanet's upside potential. I'm running the numbers and they're kind of blowing my mind, not gonna lie, so we're gonna walk through them. Let's break down at first the most important advantage that Metaplanet would have over Strategy or another Bitcoin treasury company, and that is the scalability of Bitcoin per share. Everybody knows that Strategy is the gold standard for Bitcoin accumulation, but they are a battleship. With over 555,000 Bitcoin on the books, any meaningful lift in Bitcoin per share now requires such a massive incremental Bitcoin buy. A 1,000 Bitcoin purchase for Strategy barely nudges the dial anymore, but that same purchase for Metaplanet would skyrocket Bitcoin per share by 20%. Their small treasury base gives them exponential Bitcoin per share torque. Their shareholders are aligned, the company's aligned, the strategy's aligned. They all expect dilution, and in fact, as long as each raise buys more Bitcoin per share than currently embedded, dilution is accretive. And the cost of capital in Japan is almost nothing. Strategy's convertibles yield 0.6% to 2.2%, which is obviously worth it for them. That said, Metaplanet can raise at a fraction of that thanks to Japan's monetary policy. So we have a lower capital cost, a much higher torque, and no institutional handcuffs at all. In short, I think Metaplanet is what Strategy would look like if it were re-engineered from scratch for 2025. And here it is, the mechanism that makes everything click. I do not want to go into this in too much detail because if you are a Strategy investor, you totally understand this. Actually, you might not. There's a lot of bewilderment still out there. But essentially, yeah, you're going to issue the new shares or the debt at a low cost, acquire the Bitcoin in excess of what the dilution removed, and then the Bitcoin per share is going to rise. Attracting just more retail, more quant funds chasing that BTC leverage. And then step forward, the share price is going to rise, and then that just makes the future raises less dilutive, which then all loops back to step one. This is a positive feedback loop in kind of two ways, not just of capital accumulation, but also of market perception. Every time Metaplanet increases Bitcoin per share, it justifies a higher premium to its net asset value. And I don't know if you guys have been paying attention, but the equity markets love Bitcoin proxies right now. Metaplanet shares are already trading at 3 times the net asset value today, and I've seen it spike up to 20 in Bitcoin surges. So every additional little Satoshi on the balance sheet is getting amplified. You're not just buying a slice of their Bitcoin hoard, you're buying into the recursive Bitcoin accumulator with reflexive torque baked into the structure. That's the bet, and that's why this trade is so much more than just a stock. You see right here their Bitcoin per share, 0.0001072 Bitcoin per share. That's just crazy. I think that they're going to be able to multiply that many, many, many times over in the next 18 months or so. Now let's talk about where this is going because the blueprint is already laid out. Metaplanet has publicly stated its intention to scale to 21,000 Bitcoin by December 2026. Their current pace implies a growth rate of approximately 8,000 Bitcoin per year, with quarterly raises aligned to market windows, both in Bitcoin pricing and yen softness. They can compound exposure fast without overstretching their leverage. And even in a rising rate scenario, say the Japanese government bond yield spikes from near 0% to a full 1%, the debt servicing cost remains trivially small compared to the historical compound annual growth rate of Bitcoin. Let's focus on what 21,000 Bitcoin means. That would make Metaplanet one of the biggest Bitcoin treasuries on Earth. And unlike the other ones that are currently there right now, this is a nimble operator in such a liquidity-rich, structurally deflationary economy that rewards equity issuance and hard asset acquisition. This is the kind of glide path that's not just going to scale Bitcoin, it's going to scale equity torque exponentially. Here's the math to make everything real. We're assuming a 38% dilution from current levels to fund the path to 21,000 Bitcoin. That puts total projected shares at around 715 million. Now, that 38% number, you might be asking, where that comes from. That's been their dilution rate since they started the Bitcoin strategy in April 2024. So if you run the numbers, 21,000 Bitcoin divided by 715 million shares gets you 0.0002937 Bitcoin per share, which is a 2.74x increase in Bitcoin per share from today's levels. So even if Metaplanet dilutes aggressively, as long as they continue to buy more Bitcoin per share issued than the current BPS, every raise is accretive to shareholders. Just like all the companies running the Sailor playbook, this is a counterintuitive truth in Metaplanet's model. Dilution is not a liability, it's a weapon. And that is because the denominator is growing slower than the numerator. If timed correctly, each round of fundraising amplifies ownership of Bitcoin per unit of equity. This is how early investors end up with more embedded Bitcoin that they paid for even after dilution. That's why it's important to get in early. Metaplanet is here and it's early. This is a mathematical flywheel, the recursive liquidity loop that transforms dogshit central bank currency into digital scarcity with increasing torque. Now let's talk about the market psychology layer, because this is where things are going to go parabolic for your investment. Now we're going to talk about the mNAV multiples, and what that means. It's a multiple of your net asset value. So if, for example, Strategy has $50 million in Bitcoin and the market is pricing that in at $100 million of Bitcoin, that would mean that there's an mNAV of 2. This multiple isn't fixed. It expands reflexively during bull markets as risk-on sentiment returns and institutional capital seeks high beta Bitcoin exposure without the custody headaches. Now, historically, Metaplanet has traded at a 2 to 5x mNAV during baseline conditions, but there have been moments of market mania where we've seen 20x mNAV wicks. So here's the formula you just need to remember. The final share price equals the spot Bitcoin times the Bitcoin per share times the mNAV multiple, which means a $150,000 Bitcoin and a 10x mNAV on that new Bitcoin per share that they have accumulated by the end of 2026 gives you a $44 share price on what today is trading like a penny stock. And that's without needing Bitcoin to go to $1 million. You're not just buying the Bitcoin exposure, you are buying the optionality on the mNAV expansion and market reflexivity, which is where the real upside lives. Now let's walk through what all of this looks like from an investor's perspective. We're modeling a $100,000 position at today's levels, buying roughly 29,155 shares. So what happens to that stake when Metaplanet hits 21,000 Bitcoin and mNAV multiples re-rate during a Bitcoin bull run? So here's a snapshot of a bunch of plausible outcomes that I have plotted in my return torque matrix. This is modeling a $100,000 investment as of yesterday when it was trading at $343 a share. Now, one of the first striking things that I see is that after Metaplanet reaches their desired Bitcoin per share by the end of 2026, you are seeing right here, if Bitcoin just goes up a little bit to 120,000, which I think everybody thinks that it probably will this year, and you get the mNAV that it's trading at today, you're turning 100,000 into just over 300,000. So you're getting a 3x on your investment with no change to the mNAV and like Bitcoin price hardly increasing at all. What's really exciting is that when you take a look at, maybe a bit more of a bullish but still relatively conservative Bitcoin price increase, let's say it goes to 150,000 in the next 18 months, and you look at like an mNAV multiple of 5, which is, it tracks slightly higher than today, but that's a 6.4x return on your investment. 100K would be 640,000. Now the crazy talk numbers, which to me isn't even crazy talk, I think it's a realistic possibility. If Bitcoin goes to 200,000, if the price doubles sometime in the next 18 months, and we get an mNAV of 20x, which has been happening with Metaplanet, it has hit a 20 mNAV. Right there, you're getting a 34x on your investment, so $100,000 gets you 3.4 million. So underpinning all these scenarios is the same embedded Bitcoin haul. There is 0.856 Bitcoin tied to the shares that I bought on May 7th that are purchased synthetically through equity at an effective entry of just 116K per Bitcoin. So that's the real alpha here. It's side door Bitcoin at a discount to what Bitcoin will be in the future. It's wrapped in equity, amplified by leverage and market psychology. All these other people that are pro Bitcoin are scrambling to stack their coins at 100,000 plus, but you're entering through a recursive equity backdoor and front running the Bitcoin ETF effect with torque. And if you truly believe in the long-term scarcity thesis of Bitcoin, you'll know that 0.856 Bitcoin won't be less than 1 for long. It'll be generational capital. Anyway, feel free to have a look at my little chart here. Extrapolate it, feed it to ChatGPT, put in $1 million. Yeah, times these results by 10. The upside on this stock is tremendous, and I cannot wait to see how much Bitcoin Metaplanet can actually accumulate over the next 17, 18 months or so. It's going to be a wild ride.